Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day, and before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today's guest is the CEO of Silver Elephant Mining, a silver mining and exploration company with its flagship Pulacayo silver project in Bolivia. It's Mr. John Lee. Welcome to the show.
Thank you, Jesse, for the invite. Good to be on the show for the first time.
Yes, awesome to have you here. And of course, with all new guests, I like to start with the origin story. So take us back to when you first discovered investing and how that led you to the precious metal space, having an interest in sound money, and ultimately becoming the CEO of Silver Elephant Mining.
Yeah, Jesse, I was born in the 70s. I'm probably what they call the X-Gen. I was born in Taiwan. My father was a diplomat. So when I was a young age, we moved to, when I was a teenager, we moved to the UK and then to Brussels to study. So I spent several years in Europe. And then before moving on to North America for university. And then started mining investment in the early 2000s. I started my career actually first in the Silicon Valley after I graduated. And as being a prototypical Asian, I was very good at numbers. But I was also very inquisitive because of my travel history. So I was always been quite fascinated with currencies and money and just how the economies work and how they transact. After my brief stint at the dot-com Silicon Valley about 2000, the company I worked for was bought out by Oracle, so I was very lucky being semi-retired. And I was studying a lot of the Warren Buffett's and the Benjamin Graham of the PE ratios and all the studies, and I found out that everything's inflated from real estate to the stock market. And back then, the PE of S&P was around 25, and people thought it was way overvalued. And I realized that the bubble is not so much on the equity market, but it's to do with fiats and the dollar and the dollarization, the globalization of the dollarization of the world, and that the markets were tilted depending on the flow of the liquidity. So one thing led to another. After discovering it's the dollar that's overvalued, not so much the stock market, then that got me into gold. And interestingly, my girlfriend was from Vancouver at the time, so we spent some time in Vancouver, which is an absolutely lovely city. And you cannot be in Vancouver and not be getting your hands and feet wet on the junior mining sector. If you go to a building in Vancouver, 70% of the offices are junior mining or mining companies related. So I started dabbling on the mining shares, and I was very lucky that Gordon Brett had dumped that last batch of gold at $250, and I was befriended with some really smart people like James Turk, whom I studied under, and also David Morgan. And so that they really sort of taught me the ropes, and I was reading everything under the sun. I was doing really well as a retail investor with the money that I made out of the Silicon Valley, 7 figures, and turned into 8 figure. I was doing really well, just buying and selling junior companies and having the time of my life until 2009 when the financial crisis came. Everything came crumbling down. Portfolio destroyed by 90%, like everybody else's in the mining industry at that time. So I recovered in 2021 somewhat, and then thought it was interesting to dabble into to sort of try out on the other side of running a mining company. So I started out as a hobby, and 13 years later, it turned into a double-time, full-time job. And we've bought several assets, and my specialization is silver and to some extent nickel. We've raised over $150 million through the Toronto Stock Exchange. There are not many of my peers in the junior mining companies at the time, 2009. Several of them kicked the bucket already, and many of them didn't make it. So Silver Elephant, despite sort of we are beaten down a bit right now in the doghouse, but we're one of the very few companies actually survived, and we're the owner and the CEO. I should put a lot of skin in the game to make sure that we ride through the trough, right? And now it does seem like we're going to be coming out on the other end in 2023. So that's the overall.
Great. Well, I definitely want to touch on Silver Elephant Mining later, but first I want to touch on the more broader macro picture for the precious metals, and also get into maybe some more interesting questions as regards to the state of the world and personal sovereignty, because we had a very interesting conversation pre-interview, and I felt there was some interesting points you made there. So let's start off with the main macro themes you're paying attention to for the precious metals space that make you bullish at the moment.
Yeah, just recall we had just a discovery call that lasted into well over an hour. I thoroughly enjoyed my conversation. Just in 2022, I actually since the COVID mandate sort of died down, I tried to travel the world 2.5 times in 2022. So I am a very astute observant of what's going on in the global economy. And what we're witnessing right now, Jesse, is not even once a decade or 2 decades. It's a once a generational change in paradox that are taking place. In that the dollar is under siege, not so much compared to the other fiats, because they're all subordinated to the dollar, but that the dollar used to be the supreme king and the supreme sort of currency of choice. And that was because of a marriage of convenience. Cited that, started with the 1970s with the Bretton Woods Accords, where all the G7 and currency were tied to the dollar. And then you have the Saudis, which is providing all the oil the world needs, and United States is the largest consumer of Saudi's oil, and Saudi were taking that money in exchange for protection from the United States. And the United States at the time also was the statesman of the world. It's a non-judicial, non-biased, so the big brother in sort of protecting, in sort of providing that blanket it's a statesman of the world, right? If you look at sort of the South Americans and guys that got ill-gotten gains, or the Russians or the Asians, and their dream is it's like the 100 Octobers. It's the dream of getting a ranch or getting a refuge in the United States and getting your refuge to the dollar. Unfortunately, just in the last few years, things are rapidly changing in that the United States is energy independent and it's no longer dependent on Saudi for oil, and the administration of the United States. It's not really Biden's calling the shots, but they're increasingly getting very capricious and brown-nosing into people's business. So, some of the key holders of U.S. Treasuries, China is 1.2 trillion, Russia is 350 billion already confiscated, Saudi Arabia is $700 billion, very precarious position, and you have Japan over $700 billion, and you have Turkey, you have Indonesia, you have Brazil, and these are hundreds of billions of dollars. And what I see is all these foreign reserves that's been accumulated over the last 50 years and amounting to trillions of dollars are increasingly having second thoughts about the status quo of relying on the United States for being the statesman and for just sort of providing that orderly commerce and geopolitics are coming into question. And what you're going to witness is that diversification out of the US dollar, and there's not a lot of alternatives. And therefore, I was being very, very bullish on gold and silver starting in October 2022. I was calling the bottom for gold at $16.50 and silver at $17. And my goal for my target back then 5 months ago, was $2,000. People were calling me crazy, but in hindsight, we're already at that mark, which means that I have to upgrade my target for gold to 2,400 as a conservative target for this year. So all in all, to answer your question, the key to watch out for is not so much it's not even so much a economy of the United States sort of having sort of slacks or inflationary numbers. A lot of them back in the days, people with inflation numbers, CPIs were low, people were saying, oh, it's all cooked up, right? But now inflation is high, people are embracing that as a Bible. A lot of that is all engineered. So it's not so much an inflation number. It's not so much Silicon Valley Bank, or it's not so much the stock market. I think the market is actually established at a short-term bottom. But it's really that geopolitics and diversification of several decades of accumulation of the fiat under this pseudo Ponzi scheme that's coming to light. And in the 70s, it was Charles de Gaulle of France, and I refused to accept the dollar and repatriating the dollar for $35 an ounce of gold. That really broke initially the dollar pack of $35, and on the West $800. I'm not sure if this time around is going to be as spectacular, but it's going to be something fairly close, because that $35 peg was a liquidity that built up to broke that peg. That was a decade too, a couple of decades of building up of sort of people believing that exchange has been holding true. But now we do have that peg. It's opaque peg. It's implicit peg because the gold and silver prices are managed somewhat, but that management is broken down because there's too much liquidity. And once the dam breaks, like the 1972, when Nixon officially severed the gold window, gold went up 25x. I am not sure if this time around you're going to have, well, I just said the golden brown as the first indicator of $250 as the sort of the peg. So it's been losing the peg at 8x. But if you time 25x times 200, I would not be surprised of $5,000 gold. That's sort of quite interesting. So we're sort of the third inning there, and we still have 7 more innings to go.
Right. Well, you mentioned there that you think the price is being controlled or managed somehow. I've spoken to some guests on the show who have similar opinions, Craig Hemke being one of them, David Morgan being one of them. And then I've spoken to a few others, Keith Weiner being one of the most notable ones, who wrote a whole paper on how there's no manipulation whatsoever in the precious metals market. And he's quite staunchly of that belief. So maybe you could break down for us just the level of manipulation that you've personally witnessed and how much you think it really affects the precious metals markets, and then also why you think, or if you think that might be coming to a close. What are the main drivers causing that?
Jesse, I don't want to get too philosophical, but it's important to understand that that the U.S. monetary system or the government or the governance was hijacked in 1913 by the advent of the Federal Reserve. And since then, dollars lost 98% of the purchasing power. And the reason being is, if you look at it used to be that the governments were, paying a token sort of due every time there's an election about balancing the budget and saving the next generation, but all of that's thrown out of the window. In order to continue to advance their 2030 agenda or whatever else mandates that are going on, they're so outnumbered, right, by the billions. There's a very select few hundred people that sort of putting the levers of the world. They have to find a way to continue to fuel and fund their agenda. The only way to do that is have the people that accept the fiats. That is the only way being. And to do that, they have to manage the gold and the silver price. And that's why the mainstream media always talking about the gold and silver being the barbaric relic and there's no place for being in the world. They have done a lot of things to manage the price of gold and silver, including the advent of the cryptocurrency, and then the very concerted and a very heavy-handed approach of intervening the gold and silver market via the futures market and the ETF. There's a lot of anecdotal evidence. You can read about it. Gatto, Bill Murphy, and Chris Powell are very good friends of mine. I was in the market before even Gatto was created. So they have well-documented histories of what's happening. But just imagine, say, for example, the paper market of COMEX or the futures. On a given day, you're looking at 50,000 contracts for silver as traded. That's nominal value at 5,000 ounces per contract of 250 million contracts, ounces of contract traded on a daily basis. So in a week's time, the amount of volume traded on the futures market is equivalent to the annual production of silver. So can you imagine that on a day of 250 million, a quarterly production be trading on a day, and yet silver sometimes move 20 or 30 cents at a time. Given on the volume, you should be looking at the crypto sort of volatility, but we don't have that. And then there's a lot of sort of price managing in people that are clearly in a different ulterior motive than to be profit seeking, and they will be selling silver indiscriminately on a Friday over the long weekends, and the price discovery process is ETF couldn't possibly have all the silver, and the mechanism couldn't possibly be working when ETFs are trading 10, 30, 40, 50 million ounces of silver when there's clearly not that much silver to be had. If somebody were to buy that many shares, they have to be redeemed for that much silver to be put into the vault. So I think all in all, I want to get to elaborate into the schema, but there's very price-heavy management. The question then becomes, Jesse, At which point would the managing stop, right? And the sort of and the having sort of the metals to show its true colors. I think the answer to that is it really goes step by step where the technical indicators comes into play. The cartels are quite smart in that they have limited armor. They do have some gold and silver inventory that, when push comes to the shove, have to be flooded into the market to control the prices. So you have to watch the technical indicators, and the managers are very smart in that sense that when there's a very strong indicative technical breakout, such as gold at $2,000 or silver at $28, when these technical levels are breached, the cartels know that there is a lot of buying demand, so they would let the market rip, as I mentioned, and then they will even fuel the market per se to try to establish. And every day they wake up, they're gonna have their fingers crossed to try to establish a top. And from there, they will start chipping away through ETF and through futures market. And occasionally they also dump a batch of physicals. And they also have some sort of ways to curtail the ownership of physical metals by the money managers with penalties if you own 401k in the era and in your retirement accounts. And that's why, Jesse, for many, many years, or even for a decade, I was always a bit pondered on why every time when gold and silver break out, there's such a violent movement, right? For example, 2011 when silver went to from 15 to 50, when in 2021 when silver went from $15 to $30 in the span of only 2 weeks, but yes, silver went from 30 all the way back to 17. 18 months later, the demand has always been steady and on its way up, especially on the investment side, but not so much on the industrial side, which is a lot more cyclical and economy driven. But the reason for that huge run up and the subsequent long, painful consolidation is because of the management of the silver price and the gold price. This time around, we're on the cusp of a major breakout of $2,000 level that has been hanging for more than a decade. So that is going to be a very significant breakout. I do believe that will happen this year. May not be this week. We have been dabbling on that 2050 for about a few days, but there's a very strong sort of pushback on that. And also coupling with the dollar is down already 10-12% in the last 4 months. So it's resting on a very strong support level at 100. Would not be surprised to see a bit of rally in the dollar and subsequently a bit of consolidation on gold. However, if gold doesn't stay above 2,000 on its way to 2,400 this summer, we'll be looking at another go at it in September. But I do feel very confident, along with the likes of Pierre Lassonde, which is the legend, the CEO of Newmont, and also be calling a $2,400 gold price. So I think in short, long answer to your question is that fundamentals that's driving the metal prices, gold and silver, because the geopolitical landscape of 50 years of accumulation of the fiats from the central banks coming to light, and then coupled with the technical breakout of, first of all, the dollar peaked at 114, spelled for the gold bottom at 1650, and now gold is bubbling up and is challenging its all-time high of 2100. And I think the trend of this central bank diversification is only the start, not the end. And so subsequently, we're going to see another, I believe, a very spectacular run up for gold. Maybe not in percentage terms, but in absolute terms, it's going to be the best that we've seen since the bull market started in 2001.
Very comprehensive breakdown. Now, I want to take a bit of a step back and look at the picture going on in the world with geopolitics. We're seeing, obviously, the Russia-Ukraine conflict. We're starting to see powers align outside of the Western world, with Russia and China agreeing to trade in rubles and yuan for energy. We've seen other trades such as Total Energies and the French company and China doing trade in the yuan for LNG. How much emphasis do you place on these sorts of things occurring and the pace at which de-dollarization is occurring? Because you have some people who say that, oh, this is going to happen soon. The U.S. empire is crumbling, it's in decline. And then some people have a bit of a more measured approach where they say, look, yes, all fiat currencies do die at some point, but we're decades away from anything like this occurring. So what do you think about this trend moving away from the dollar and how quickly that could actually lead to the U.S. dollar losing its reserve currency status?
Yeah, Jesse, I think it's important. You mentioned a few very key points, so I'll try to break them down one by one, 3 or 4 major points. It's important to sort of separate the fiat with tangibles. If you were to travel South America, as you probably do, or Eastern Europe, I mean, they are decades behind what's happening in the United States, where majority of the men are taxi driver, majority of the women are supermarket cashiers. So, I mean, it's going to be a long way. I mean, just because the United States economy is enduring a hiccup and there's a tightening of the interest rate doesn't mean that the United States is losing its world status as the world superpower. And so I think and it doesn't mean that just because the world is going through a recession, all of a sudden your supermarket is going to run out of goods or the skyscraper is going to disappear tomorrow like a magician. So I think that's the first. There's a lot of progress. The crisis in fiat is only translates to the transfer of ownership of assets. So it has to be very clear about we're not entering doom and gloom like the World War I, where people are starving on the street, even though the health mandate is a little separate. Secondly, let's talk about the sort of the bilateral or bartering trades of yuan versus euro and rubles and versus yuan and renminbi and then the South American currency. Jesse, it is a temporary arrangement of convenience. It's not going to last long for a couple of reasons. Russia reluctantly accept renminbi because they had no other choice. They don't have commerce in Europe. They cannot transact in dollars in SWIFT system. I know that because right now I'm in Mongolia. We have hordes of Russians coming in to Mongolia, bringing their rubles, a lot of them in cash in exchange for dollars. And Mongolia is one of the very few countries that actually let you do that, maybe 1 or 2 in the world. So they're stuck. These rubles are not practical and usable. It's not even a practical currency anymore. So the only way to do that is to accept renminbi. All these printing presses are they're dictatorial almost, right? You can turn whatever you want. I mean, South America or Banana Republic, their currency blow up every 3 years, for good reasons, because they keep printing. They have no self-control. So I don't think Putin is going to be too pleased about holding excessive amount of Chinese currency with the printing press as the backyard of Xi Jinping without check and balances. And it's not like the United States had a lot of check and balances either, just because the United States had a bigger Ponzi audience, so that the game lasts a lot longer. And same with French. And then if you talk about all of them wise up and see that nobody want to hold each other's currency because they don't want to be somebody else's biage per se, then okay, let's say you invent a new currency. I had another talk show earlier say, well, who's going to decide how much each country can print of this new unified currency? And I'm having doubts as to deciding on even the time zone they're going to have such kind of meetings. I mean, you're talking about Putin's going to have one at 9 o'clock on Russia time, and Macron is not going to be happy about it. And Zula wants something else. And what language you're going to conduct? There's nothing in common amongst them. Culturally, language-wise, history, monetary policy, population, advancement in economy, they have nothing in common. And just because they have, quote unquote, maybe a common adversary in the United States doesn't mean that they're friends. So I see a lot of going back to the ages of discovery of what is good money. It's almost a bit of rhetorical, but everybody's going to come home to roost and very, very quickly in the next couple of years and realize that the only practical means of exchange for international commerce is going back to pre-70s where there's going to be a currency or maybe not a currency or a gold-backed currency that you'll have so much currency when you have that much gold. That is really the only way that things can work. But right now, because of this, getting a bit of a scrambling of ways to make things work. But however, as soon as a country start accumulating a trade surplus to some extent, that's being excessive holding a currency of somebody else's money, they're going to be either being a discussion of a alternative currency or unified currency, and that's going to doom to fail unless it's backed by something unbiased, or they're going to be just cashing out of that renminbi or whatever currency that's on the surplus and turning into something that they believe are worth holding, and that would be gold, Jesse. I do want to talk about these geopolitics you mentioned at the onset. I don't really look at, say, United States, East-West versus the West, or the North versus South, or South America versus colonialism. What I see, and I think it's plain for everybody to see, Biden is not the one that's calling the shots. Even Trudeau is not the one that's calling the shots. The guys calling the shots are the ones the same that are 200, 300 years ago, when the dawn of civilization, they were controlling the world commerce. And you know, there was 150 years ago, the Opium War, the British came on shore of China, and they were pillaging the ransacked all the treasures and artifacts, and they shipped to London. And then not so long ago, maybe about 30 years ago, 25 years ago, there was disintegration of the USSR. A lot of the control of the national resources were dividended out and shipped to the United States for their IPOs of the ExxonMobils and whatnot. And what we're seeing right now is the Putin's and the Xi Jinping repudiating on the exact same demands that are being imposed on them by the same people, maybe their grandchildren or their children, descendants of that. And they want none of it. And that's why I see these breakouts, and the people ask me, when do you see the war in Ukraine finish? I say, you know what, you should be asking when the next war starts. And Taiwan's being picked on for good reasons. And these wars will not end until there's a regime change. And this is being openly talked about. You know, Bloomberg and even Joe Soros talking about Xi Jinping being greatest threat to world democracy. I mean, you don't say something like that unless you've been given very explicit instructions on word for word of what you're going to put out there. So I don't see things are getting better. In fact, things are going to get a lot worse, which means that you're going to have a divided world. It's not only divided into two, it's fractious in supply chain, in demand, in currency, in travel. I just want to give you another quick anecdotal evidence. When I flew from Germany only 6 months ago, from Germany to Mongolia, used to be I can fly from, it used to be a 9-hour flight. You can through Moscow and through Ukraine, Moscow, and you landing in Mongolia. But now you have to go through Turkey, beneath the Mediterranean, okay? And then you go up to, then you go through China and you go up to Mongolia. Can you imagine, Jesse, an alliance where India, China, and Turkey and Russia form a bloc versus the West? If somebody were to travel from Japan to London, it's I don't think people give it a lot of thought as to the ramifications of what we're witnessing, and we're only on the cusp of very interesting development that's going to take place for the months, years, and decades to come. Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.